All right. I hope everyone can hear me and most importantly, see me okay. Welcome. My name is Hunter Smith. If you out on the audience could do me a quick favor and just put we can hear you or something like that in the YouTube chat function, that would be just awesome. My name, again, Hunter Smith. Welcome to another market roundup. This is actually the first market roundup that we've done of 2021, and I'm excited to be here. As you can tell by the audio-visual issues, 2020 didn't want to end on this end whatsoever. Just wanted to keep going, rolling into the next year. Can't believe it's January 8th. But let's get to the disclaimer. This demonstration is designed to instruct you on using Metastock and accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should be only used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of our software, any trading strategies, or information provided in connection with the company. Today is the 8th. We've had a very interesting week in the market, and to give us a synopsis of what has gone on and what we can look for next week, we have a very special guest, Mr. Sagar Nandi. Sagar, can you hear me okay?
Hi, Hunter. I can hear you. How are you?
I'm doing great, especially that your audio is working. Everything sounds good. We've actually worked with Sagar for a number of years now. We're lucky enough to have one of his add-ons available within Metastock. In general, he's a wonderful educator. He's a great trader. Glad to have you here today, Sagar. Happy New Year to lead off.
Happy New Year.
Did you do anything fun for the holidays?
I bought some fireworks and played with that. I live by the beach, so I went to the beach. Nothing spectacular. The COVID virus is everywhere, including where I'm living now. So not going out much.
Yeah, it's it brings new definitions to fun. Holidays were definitely interesting this year. Market, though, here in the U.S. at least, has been relatively steady, even though our political system's kind of in the meat grinder right now. What'd you think about this week?
I think the market is doing great. Whatever happens to our audio system today during webinar, or whatever happens with the political system, doesn't seem to matter to the market. Market is continuing to go up, including today. There is absolutely no sign of weakness. When we look at the market, look at internals, look at industry sector, stocks, all the possible angles that we look at, there is absolutely no weakness in the market. By the way, are you able to see my screen, Hunter?
Yeah, I can see it just fine. I can see the disclaimer there. Okay. The market showing incredible strength against meat grinder politics and the vaccine and are we going to get a stimulus? Are we not going to get a stimulus? Does that seem weird to you, or what? How do you feel about that whole situation?
I think what the market is telling is what the market always tells is, if you want to make money from the market, don't look at the news, don't think of why this thing should happen because of that thing, but just see what the market is doing and trade accordingly. There are many people who are bearish. They are having webinars regularly, and they are, for good reason probably, expecting a pullback. But whatever I expect, whatever they expect, whatever everybody expects, market doesn't seem to care. And this is something not happening today. That happens every time. So the way to trade in the market is to see what it is doing, not thinking what it should do. That is my personal opinion. Market doesn't care.
Yeah, and with the systems that you have, it's very easy to be not really biased towards news. The way that having the pleasure of doing a bunch of webinars with you and looking into your systems, et cetera. We actually had one gentleman here in the chat already that said you had the best add-on for Metastock, which is awesome. Yeah, and with the systems, the technical aspect of it is something that you're able to concentrate on with your add-ons, and I just love that part. So, what are there some stocks, or are there some instruments that you want to look at today, I assume?
Sure. It's always great to be with you and all the other viewers here. Thanks for joining, everybody. Happy New Year to everybody. We'll certainly look at the market, and Hunter mentioned one thing about market. If we want to trade profitably, then we have to know what the market is doing. After that comes the decision of what stock to buy, or probably which industry to look into. But the most important thing is to look at the market. If the market is bullish, it is almost impossible, and I'm hesitating to use the word impossible, but let me use that. Let me rephrase it. If the market is bullish, it is impossible to make money shorting the market. If the market is bearish, it is impossible to make money buying stocks overall. One trade may go in our way, but we have to be with the market, and it is very important to know what the market is doing. And how do we do that? Why don't we look at different angles? Sometimes if we look at one angle, that is not enough. So let's pick up S&P 500 ETF, SPY, and I am using the Q charts. Q is the complete unambiguous, easy to use system that I use on Metastock. By the way, I use multiple trading platforms, brokerage platforms. I have multiple brokerage accounts in different countries. But I always say, if I have to choose one platform that I must keep, and only one for my trading decisions, that is, everybody knows by now, Metastock Zenith and Metastock Real Time. It's not end of day. It is not anything else. Even for news, it's Metastock Zenith, Metastock Real Time, and recently Metastock came up with an excellent add-on, Fire, and I am making good use of it, as I will demonstrate today. So this is S&P 500 ETF, SPY. Let's look at the weekly daily together. That is my go-to template. I call at a glance template. If we look at the weekly, it is going straight up. There was a drop during the COVID period, and that drop was preceded by a bearish headwind. There was a sharp drop and equally sharp recovery. It easily surpassed the peak before COVID. And this week, the last candle on the left-hand side weekly chart, this is the week that we just completed, as bullish candle as it can be. Why? Because in Q's charts, cyan and green is bullish. It's all color-coded. Red, magenta, bearish, yellow is neutral. This candle color in weekly is bullish. Shape, as bullish as it can be, closing right at the high. And there are a number of band indicators. I'm not going to explain all of them, but this dot is telling it is a reversal candle. A reversal candle is a very bullish indication. So we have an overbought market. It is at price extreme high, overbought market, but this week is very bullish and the daily is also going up. This is not only for SPY. If we look at even futures, and let's look at NASDAQ futures, we could look at any of the E-mini futures. NASDAQ futures, let's remove the relative performance for now. Again, very bullish candle this week in terms of color shape. Again, a reversal candle in the weekly chart. Now, is it happening only in the USA market? The good thing about Metastock is I can use it to look at multiple global markets. Let's look at Australia market. And we'll come to the conclusion that it's not only USA market that is bullish. This is Australian Market Index, AXJO. It is also going up in the weekly chart. Yes, it didn't recover to the pre-COVID high, but For several months, it is going up. If we look at Japanese market, by the way, Hunter, I cannot see you. I hope you can still hear me.
Yes, yeah. I just wanted to make your charts a little bit bigger, and
Okay, great.
everybody got tired of my face. So
I never get that. That's fine. So this is
thanks, buddy.
topics. This is topics. Japanese index. Again, very bullish weekly candle. Again, a reversal candle in the weekly. And daily is, of course, bullish. If we look at the China market, CSI 300 index, how much more bullish can it be? Very sharply moving up. If we look at the India market, Nifty 50, how much bullish can it be? Now, we can all think about why the market should not go up. That doesn't matter. All the global markets that we saw so far are bullish. Not only the USA market, of course. The two strongest markets are the USA market and the India market right now, of all the ones that I studied. Now, this is what we can see from the market indices, market futures, market ETFs, but that's not all. Now that I am using FIRE, that's a Metastock add-on, to aggregate data, I am looking at few things. For example, this mega cap top 20. This is not one stock, this is top 20 mega cap stocks in S&P 1500, and I'm able to see that today I didn't process the data. It is as of yesterday. As of yesterday, mega cap top 20, if you see the relative performance line, it is showing mega caps are underperforming the market because the relative performance is tilting down. But is it bearish? No. It is moving in a sideways range, and there are multiple these automatically drawn, I think, very smart trend lines called memory trend lines. These trend lines are there. Unless these trend lines are broken, we are not going to be bearish even on the mega caps. So mega caps are relatively weak right now, but it is not bearish. It is just moving sideways. So we looked at market from ETFs, futures, global indices. We looked at it using mega caps. Let's now look at the market internals. How do we look at market internals? We can look at it in different ways. Let's look at the whole of NASDAQ composite and whole of NYSE composite, and what is going on under the hood using the new high-low, advanced decline, up-down volume, and also using Q thrust and Q jump to see if they are overextended. If we look at the composite indices themselves, it is very bullish. Again, in the NYSE on the right hand side, there is a trend line, and these are weekly charts. Unless this trend line is broken, there is no thought of taking short trades in my view. Is it bearish? No. Is it bullish? Yes, very bullish, this weekly candle. What about NASDAQ as a whole? Not QQQ, not NASDAQ 100, is the whole of NASDAQ, very bullish. Are jump and thrust hitting red dots, the overheated points? Not for NASDAQ, for NYSE, only jump is hitting red dots, the overheated point, but not the thrust. When both thrust and jump hit the overheated red dots in both NASDAQ and NYSE, that is the time to be cautious. That is the time to be bearish? No. We'll be bearish only if these major supports are broken. And we saw the supports are there in market ETFs also, and the supports are in the composite indices. Now, if we look into the internals, let's look under the hood, new high-low. If we look at the right edge, it's very strong. New high minus new low for the entire NASDAQ and NYSE, there is no sign of weakness at all. If we look at advanced decline, there is no divergence, no weakness. It is normal up-down move. And by the way, these are raw data. They are not average data. There is no weakness at all. Same for up-down volume. This is showing the market breadth for NASDAQ and NYSE are bullish. Now, these are broad broad internals. What if I wanted to look at, for example, let's look at all the major indices using weekly chart. And what are the major indices? I'm currently using the Dow Jones, NASDAQ 100, S&P 1500, S&P 500. Again, I'm using the same studies, Q thrust jump, then new high low, advanced decline, up down volume. In addition, I'm looking at percentage of stocks where 50-day moving average is above 200-day moving average, the percentage of stocks above 50-day moving average, percentage of stocks above 200 moving average. Let's read them one by one. For Dow Jones Industrials, that's the Dow Jones 30 index, the constituents are not showing any weakness. If the 50-day MA tilts down below this white line, thin white line, then we may think that it is weakening. But whether it is Dow Jones or NASDAQ 100 or S&P 1500 or S&P 500, the stocks where 50 MA is above 200 MA, there is no sign of weakness. We have to wait till it tilts down below the thin white line to think there is some weakness. What about the percentage of stocks above 50-day moving average? Again, no sign of weakness for any of the major indices. Major indices will show weakness only if they break below this white thin line. About stocks above 200 MA, again, no sign of weakness. Thrust and jump, not hitting red dots for Dow Jones, not hitting overheated red dots for NASDAQ, not hitting that for S&P 500, only for S&P 1500, only jump has hit the red dot. So the market can go up further. If we look at new high low, there is no sign of weakness, very bullish. Advanced decline, strong. Up down volume, also strong. There is no divergence. So we looked at the composite indices, two of them. We looked at the four major indices. What if I put all of them together? Let me share one total market view, and that single chart so far I have seen always tells that market is going to roll over or not. This is a chart of S&P 500 ETF SPY. The chart itself is not that important. We could use QQQ or anything. What is important is the numbers coming with the candle bars. They can range from 1 to 6. Bullish accumulation is green and bearish distribution is red. And I'm going to now make a statement based on studying this chart for months and years. A severe market drop has never happened unless there are number of large distribution days, the red dots, and not single count, at least 2 or more. So this is the pre-COVID area. You can see even before it came to the top, there were 2 distribution counts more than 1, 2, 1, 2, 1, 4. And what are those distribution counts? If I look down here, this was NASDAQ distribution, the overall exchange. This was NYSE, the overall exchange. What was this 4 count distribution? That was for the NASDAQ exchange, NYSE exchange, also for S&P 1500 and the S&P 500. NASDAQ 100 and Dow Jones 30 didn't show distribution yet. Now fast forward a little bit. The first drop that happened from the peak had a 6 count distribution day, and that was the day when everything had distribution. All the 4 major indices as well as 2 composite indices. And you can scroll back more and more, you will see that a significant drop has never happened unless it started with at least 2 count in distribution and then increased. What if I scroll to the right? Where is a distribution day? Nothing. And if at all there is something, it is mostly count 1. So at the right edge, if we look at the market breadth total view, and I'm looking at daily, let me open also weekly, daily together. I like to look at weekly, daily side by side. Again, the distributions are not there, only accumulation, only green accumulation count. So unless I can see red distribution counts coming and I see the trend lines are broken, there is no reason to be bearish. So what we looked at so far, we looked at the global markets, we looked at market ETFs for the USA market, market futures, we looked at the major indices internals, we looked at the composite indices internals. There is no sign of weakness. Now from market level, let's drill down a little bit, drill down to the sectors and industries, and these are also part of the Q system. I'll not go through the entire system, but let me highlight some data. This is to me an extremely valuable graph that shows the advanced decline breadth for sectors, industries, and stocks. And currently I'm using USA market, but I could use it for India market, Australia, UK, etc. So this 1 month to 1 day, and market just closed, so the real-time data is also there. 1 month to real-time breadth across sectors, industries, stocks. Let's look at them. Sector, industry, stock, advanced decline over 1 month, bullish. Over 10 days, bullish. Again, green is bullish, red is bearish. 5 days, bullish. 2 days, bullish. 1 day, that was Thursday, still bullish. Today is bearish overall. Now that is an interesting thing, and these are the things, the more you look at the market from these different angles, you start to pick up. Let's go back to the chart of, let's say, S&P 500. Let's use the futures ES. And I'm looking at the daily candle, the last candle. It is bullish. It closed right at the top. It has high volume, not very or extreme high, which would come as a dot on the volume or activity bar. That didn't come, but the candle color is bullish, candle shape is bullish. Whereas if I look at the, whether I am looking at the sectors today or industries or stocks, it is not bullish. What does it say? It says that the market went up today for 1 day, not because the overall market was bullish, because what? Because mega caps went up. That is the conclusion. Now, can we look further into the sectors, industries, and stocks? Certainly we can. And let's look at them. Let's look at some graphs. They are visual and they immediately tell us what we need to know. Over 2 day period, that is Thursday, Friday, actually it's real time. So let's say Thursday, Wednesday, all the sectors, 11 out of 11 sectors were up. What happened today? This is real time data. Just now market close, it is still showing real time. Only 3 sectors went up, 8 went down. This is in contrast with what we see from market ETFs or market futures. Under the hood, today market is not bullish. 3 sectors went up, 8 went down. Which 3 went up? Okay, information technology is one of them. The red bars are for real time today. So Infotech went up by a small percentage as a sector, 0.24. Which other 2 sectors went up? Real estate, 0.5%, and utilities, 0.2%. All are small percentages, and 2 of them, real estate and utilities, they are defensive sectors. If they went up, it doesn't tell good things about the market. Only 1 non-defensive sector went up, but by small percentage, and all the other 8 sectors went down. That includes communication services, consumer discretionary, energy, financials, healthcare, industrials, materials. All of these are non-defensive. Non-defensive sectors did not do well. And even consumer staples, defensive, also did not do well. So there is some anomaly in the market, and that may be a reason to be cautious, but that doesn't tell market is bearish. It may all change tomorrow, Monday. This is what we see, sector performance in real time, today's performance versus previous 2 days. If I want to step back a bit more, and if you are wondering how I am changing the graphs, I'm pressing page down on my system. I'm using QH. If we look at 5-day period in this graph, this is sector performance again, comparing 5-day percentage over 10-day over 1 month. 5-day, 9 sectors up, 2 down, 10 days, 10 up, 1 down, 1 month, 9 up, 2 down. Which ones were down earlier? Utilities, real estate. So the sectors that were weak earlier, in fact over 5-day and over 1 month, the only two sectors that were down were real estate and utilities. They are defensive sectors and they outperformed today. They did better. And all the non-defensive sectors went down except Infotech. Infotech went up with a very small percentage. That is showing, though, again, the market futures, whether we look at ES or we look at NQ, they are looking bullish, very bullish from the candle shape, candle color. Under the hood, we now know that the sectors are weak. And we saw earlier the industries are also weak. Today, industry and as well as overall stocks also weak today. Does it mean market is going to drop? No, it doesn't mean that. When am I going to look for short trades? For that, Q Technique has a number of unambiguous checklists. I just applied the checklists to see if any short setup is available. Right now, I am not even looking at the short candidates because the market is still very bullish. So we looked at the market from different angles. Which angles? We looked at, again, global markets. We looked at market ETFs, market futures. Those are number 1 and 2. Number 3, looked at composite indices and major indices, internals and comprehensive total view of market breadth. That is number 3 or 4. And then we looked at sector, industry, stock breadth from 1 month to real time. That is not all. Let's look at the market from some more angle. And this time I'm going to look at technical breadth. And let me start with the weekly view. This is a Q view again, very unique in my opinion. This is showing a technical breadth, and this technical breadth is customized to your symbol universe. If you are trading in the USA market, it will show USA technical breadth on your symbol universe. Some people may be interested to trade only mega caps, some may be only high growth stocks, some may be trading only liquid stocks, some may be trading only optionable stocks or liquid options. So the stock universe is different for different people, and this view is very important because this view is showing for your or my particular trading universe how is the technical breadth. And let's look at the weekly picture again, balance between bears and bulls. All signals, weekly view, 87% bullish. Strength signals, 97% bullish. Trend continuation signals, 85% bullish. By the way, this is as of today's data. I only processed today's data as of Friday's close. So as of the weekend, everything is bullish. Even reversal signals in the weekly interval, 85% bullish. Very bullish, and we can know about the magnitude of bullish versus bearish from these bars. Like go with flow trend following setup, many more bullish than bearish. Breakouts, many more bullish. Even gap up or high bullish pressure, even reversal. The cyan again is bullish, cyan green bullish in all Q systems, magenta red bearish. So just by looking at it, the weekly view is bullish from every angle. We saw from QH, sector industry stock breadth, that today the market was not so strong. And is it visible from my stock universe? And by the way, I'm using the liquid stocks and S&P 1500 stocks as my stock universe when I'm calculating these graphs here. You could use a different universe, of course. And when I use that liquid stocks in USA market and S&P 1500 combined together, today's technical breadth here is the daily breadth. It's not actually bearish. If we look at all signals, it is balanced. Strength signals slightly more bullish, trend continuations more bullish than bearish, reversals are more bearish. What does it show? If I look at the detailed bar charts, there was a large number of gap ups in my universe, and this universe has about 2,200 liquid stocks in the USA market. There were a large number of gap ups, and then there was a large number of reversals. So if I drill down into those stocks that gapped up and then reversed, then I may be cautious. But overall picture, whether we look at the daily and certainly if we look at the weekly, the technical breadth is also bullish. So I looked at the market from different angles, didn't look at the stocks yet, looked at many angles, and every angle is bullish. When that is the case, then the only trading possibilities are in the long direction. And which stocks to buy? Of course, that I will align the forces. So I will first go to the sectors. And find out which sectors are strongest. These are the 11 sectors. I could find strongest sectors over 5-day period or real time today. And this is showing relative sector strength. If I wanted to know actual percentage change, I could see it from here. And I can see today, many sectors went down with large percentage, some went up with smaller percentage. If I want to know over 5-day period, I know energy is the strongest over 5-day, 13.99, almost 14% up. Materials, after that, financials, after that, etc. You can either look at 5-day or real time or 1 day if you are looking at it after market close to decide which sector to focus in. And if I want to, let's look at 5-day, energy, materials, financials. Let's choose the top 3. Am I going to look at all stocks from these 3 sectors? No, I'm going to look at their underlying industries first. What I'm doing, market, I have decided from all angles it is bullish. Now sector level, I'm choosing the strongest sectors, and then I'm going to the underlying industries. In all those sectors, I'm going to choose only the industries that are strong in these are different sector industries, but going to choose the strongest one. For example, copper is up by almost 17.5% this week. Oil and gas exploration and production up by 16%. Oil and gas, you will see many energy related industries, materials industries. If we look actually at the top 1, 2, 3, 4, 5, 6, 7, top 7, they are related to either energy or material. So let's look at all of them, and now I can drill down into the stocks. What am I doing? Am I going to look at their charts? No. In my personal trading, I want to buy only fundamentally strong stocks. Some people just use technicals, that is also fine, but I have the tools to decide the stocks that are strongest in terms of fundamentals, relative strength, comparing stocks in the same industry. And when I have enough number of trades in strong fundamental stocks, my view is why not just trade them? I still have so many trading opportunities that I cannot finish taking them. So this is a list of all the stocks in S&P 1500 for now, in all the strongest industries, in all the strongest sectors. All of them, are they fundamentally strong? No. If I look at the earnings per share growth here in the latest quarter, some of them are very negative. If I look at valuation score, again, Magenta is overvalued. Some of them are not strong. Using a single click, I can look at the stocks in this group. It came with only one in these few industries, only one FTI that is undervalued plus earnings growth in the last quarter, that is undervalued, earnings growth in the last quarter, great earnings quality, and a short squeeze potential. This stock is up today by 2.8%. Yesterday it was up by 4.6%. over 2 days 9.6, over 5 days 18%. It is 46% below 52-week high. It is already 153% above 52-week low. Now, if I carried out this analysis, what is this analysis? Is top-down analysis, looking at market, then sector, then industry, then stock fundamental. Then I could have probably considered buying FTI near the low. Now it is already 53.4% up from 52-week low. Doesn't mean it may not have a trading opportunity. Does it have any trading opportunity? We could click the chart icon to open it using the chart. As of today, I have a few trade setups in Q systems. They are unambiguous based on checklist, and those checklists can be applied on this single chart. This is daily. Of course, I look at weekly also, but I just need, or you will also need, Q traders know, only few seconds to decide whether there is a trade setup today. Is it there today? No, there is no trade setup today. But if it was there, then I would have carried out a complete top-down analysis to find a very fundamentally strong stock in a strong industry, in a strong sector that is at a buy point. Now, market is bullish, but at the same time, again, if I look at SPY and look at it using weekly, daily, market is bullish, but doesn't mean that I'm going to buy every day. Why? Because market is very overbought. I have to be very picky, choose stocks that are still fundamentally not overvalued, that are in strong industries and that are not overbought technically. And those stocks may be there. We may look at some of those if you want, or if you have some stocks, I may look at that. By the way, I regularly share such stock analysis on my website sagarnandi.com and also on my Twitter page, Twitter handle Sagar Nandi. You will see I use the exact same approach every time. There is no variation. Week after week, month after month, year after year. I only buy if stock is fundamentally strong, has a technical buy point in strong industry fundamental, everything is aligned, and short only if all of them are weak. Market
if
currently is bullish. Yes.
Oh, sorry, if I could interject, Sagar, we did have a question. Is Q systems, or can Q systems be useful for scalping?
You know, I hesitated. You can see I hesitated a bit. There are many people who ask me questions about scalping, about Forex, about futures. The correct answer is that yes, you can do that. But the way I like to answer it, and it's not a direct answer, please pardon me for that. I retired at 46 years of age. I'm not running any chat room or anything. I'm sitting by the seaside. I'm trading, and I have a few traders who follow Q systems. I'm grateful to them. Now, I don't have to go anywhere to office. So I go to coffee shops and I sit down, sometimes in Starbucks, sometimes local coffee shop. And two kinds of traders come to me when they look at my screen and charts and all this industry colorful screens. They come to me. One kind of trader come and tell, I used to trade. And the other kind of traders say that I am investing and trading in the market. So one group says I used to trade. One group says I trade and invest in the market. Maybe USA, maybe Australia, maybe Hong Kong, maybe Singapore. And the group that says I used to trade, I ask them, what happened? Why did you stop? He said, I am now into some work, or I am into business. I am running this entrepreneurship. And I again ask, what happened? He said, I used to trade Forex and I don't ask any more question. Or they say, I used to do futures. I don't ask any more question. And then the other group, they say, I trade and invest in the market. And I ask, what do you do? They say, I trade stocks. That is a long answer. And the correct answer is, of course, you can scalp. But again, I don't encourage anybody going into risky trading. And to me, what is risky is where risk management is more difficult. Scalping means, as I understand scalping, again, by the way, I am just sharing my view. It doesn't have to be one view. I know there are tens of thousands of ways of making money Okay, maybe tens of thousands of ways to lose money in the market, maybe a couple of ways to make money in the market. But I don't claim to know everything. But what I know based on my study of the charts, the more shorter term you go, from weekly to daily to hourly to 5 minute, 1 minute tick, the more you go to lower time frame, it becomes more random. And when the chart becomes more and more random, you are adding risk. The people who added risk to their techniques, those are the people who come to me in Starbucks and says, I used to trade. So I suggest this to all traders who approach me, that if you want to do more risky trading, fine, but you prove to yourself first, not to anybody else. To yourself first. For 1 year, you can make money with low risk instruments with low risk interval, so daily interval and stock, no leverage or very minimal leverage, much less leverage compared to forex. That is my view. So I gave a long answer, but I hope it was useful to people who want to take trading as a earning opportunity. If you want to take trading as an exciting opportunity, of course you can go into it. You don't have to ask me. You can of course go to scalping or future or forex.
That's a good answer. You know, I like the personally, I like the part about you know, it getting a little bit more random the lower the time frame goes.
And Hunter, may I add one more thing?
Yeah.
You know, I have an engineering degree, I have a master degree, I have an executive MBA degree. I have classmates who are in very high positions. I know traders, they are extremely qualified, extremely successful. They have tried everything, whether it is scalping or algorithm writing programs, and they have all come to the conclusion after many years of study that the lower the risk, the safer is the instrument or technique. So I wanted to emphasize that it is not only my view. I know a lot of smart people. They all came to the same conclusion. Manage risk first, profit will follow. If we try to look for profit with high risk instruments, profit may not follow. That's an honest answer.
It goes back to the, you know, sometimes it's more of a people looking for the exciting trade, the home run trades, etc. And that's, you know, I think that contributes so much to why people burn out when trading, you know, versus having a system that they can use continuously, that has you know, regular profits. Now, we did have a question: is there a P&L of the trades shared in the forum?
The forum trades I am logging for many years, but this is not supposed to be trading tips. I don't believe in that, and I don't want to take any obligation to share that. So I will not give any statistics, but if you consider that these are stock trades, sometimes I do take low risk option trades, but if you consider these to be stock trades, let me share something, some mathematical basis, and it is not tied to queue systems, the systems I use, to any system. And this is a simple arithmetic. And you could keep that in mind probably. And I'm giving again a bit of long answer. If you are taking 100 trades a year or 2 trades a week, which is not difficult for most of us, if we have 60% success rate, so if we take 10 trades, 6 profit, 4 loss, then I will skip some of the columns. If I risk 1% only of my total equity in each trade, let's assume stocks, and if I assume only 1:1 reward risk ratio, this particular line doesn't say anything about Q system or any system. It just says whatever technique you are using, all you are trying to do is reach 60% success rate, minimum risk in each trade, 1% of equity, and not astronomical reward risk ratio in each trade, 1:1. All you have to do is that, and you achieve 20% return on total equity at the end of the year. This is simple arithmetic. Now, if you increase the number of trades, and this is important, I am not trying to improve the success rate. I'm not trying to get better reward risk ratio. If I just improve the number of trades from 100 to 200, that is 4 short-term or swing trades a week, then the annual return becomes 40% of total equity. Remember, not invested equity, because when we are talking about taking 2 trades a week or 4 trades a week, and let's say average holding period 5 days to 10 days, average holding period, all of our money may not be tied in the market, but the profit percentage it is showing, it's on the total equity. So again, not being fully invested in the market also reduces risk. If we just take more trades, we get 40% return. And if I take 6 trades a week, again, not very difficult, in fact, that is 300 trades a year, the return becomes 60%. Now, once you achieve this, I think reasonable success rate, 60%. And I tend to say if we are not able to achieve 60% success rate swing trading stocks, probably it is better to simply keep on buying SPY with equal monthly installment that has the advantage of dollar cost averaging. So why bother if my success rate is not even 60%? Is it possible to reach 60%? I think it is very possible if you are disciplined and if you are only buying in a bullish market, only buying in strong sector industries, only buying in strong fundamental stocks, and has a low risk technical setup. And you will see that. Now, if you follow, I think some of you may be following the trades I share, you know the answer whether the success rate is more than 60%. The rest is your discipline. Now, one gentleman recently started trading in India. He was a managing director of a large publicly listed utilities company. Very smart person. He had several MBAs like me, working as his secretary. I think pretty wealthy person also, though he didn't say anything. He's pretty humble. Now he started trading and I advised him to keep a log of his trades in simulation first. And that is what I tell everybody. And I will also share with you, most of the people are in a hurry to take the trades, not to trade on simulation, meaning not to complete the learning, but start to trade. And some of the reasons, recently I was talking to a trader in a country and he said, I need to recover my cost for Metastock Zenith. Okay, probably you are approaching it in the wrong way, because if you didn't learn first, you will not recover the cost of anything. You will keep on losing more money. Coming back to this gentleman though, what he did is amazing. I have not seen many disciplined people. He didn't know, and I shared it in my personal webinars earlier, didn't even know how to right click the mouse on the computer. I hope he's not upset with me for telling. Anyway, I'm not telling his name. But the discipline with which he started learning and he logged the trades, I told him, log your 100 trades. And let me, give me a minute, I'm trying to locate. It's very important. And while I'm opening the file that he used to log his trades, I want to make a statement. The statement is, whatever technique, whatever system you are using, you don't trade with real money. You log 100 trades, whatever, even scalping, if you are scalping, log 100 trades following a disciplined approach. And what you log, you not just log the symbol, ticker symbol you are trading, what is your risk, what is your entry, exit, profit target, stop loss, all this. You also log what was your reason for buying or shorting the stock. When did you analyze? How was the market? How was the industry? How was the fundamental of this particular stock was? What was the technical reason to buy? And this gentleman didn't do, but I also ask people, and I do myself, score every trade. If I executed it properly, analysis, score it as 1. If I took the trade only when reward risk ratio is at least 1. Why 1? Because that was the mathematical basis I shared earlier. Did I size my trade properly? Why sizing is important? The mathematical basis is that I risk only small 1% of my equity. If everything I did correctly, I score myself as 1. If anything I deviated, and we are all human, I also deviate sometimes, we should score as -1. And after 100 trades, if this aggregate score at the top is 80%, I have not yet seen a person who is not able to consistently make money after that. How long does it take? Okay, let's see how long let me delete this data because I don't want to spoil the beautiful record he created. Let's look at his data. And believe me, if you want to learn trading, you may or may not have this diary. Log that trades, 100 trades with discipline. Learn from that. You don't have to spend more time. How long did he take to log the 100 trades? He logged 106 trades. All of them were closed by the end of the year, and I suggested him to open a new diary for the new year. And now he is probably starting with live money. Last year he started with simulation, or at least he said it is simulation. Assume that he had an initial equity of say 1 million, 1% risked in each trade. So it was 10,000, I think, 10,000 in each trade. He took 106 trades. His success rate was 76% as per this log. Total 106 trades, 81 profitable, 25 loss making, and he could log these trades 84 days. What I mean he could log these trades, he could apply a systematic approach and find 84, at least 84 trades. At least 106 trades in 84 trades. That is important. Why important? Because the mathematical basis that I shared, it assumes a number of trades per year. Are we able to achieve 100 trades per year? He certainly could. He did 106 in 84 days, much more in 100 in a year. What was his net P&L on total equity? 137%. But probably, I mentioned it in my personal video, probably he would overshoot his margin capital. So I calculated his actual P&L would have been 1/4 of that in 90 days, 3 months. 1/4 of 137, so it's about more than 40%. More than 40% return in 3 months. How did he achieve that? He achieved it by realizing 76% success rate. And if you see his reward risk ratio, he was more or less pretty disciplined. Not always. I can see sometimes he had, sorry, I cannot say not disciplined. He achieved better than 1:1 reward risk ratio, which is good. If you look at the risk column, I think he managed risk overall quite well. Some of them may be logging error. In any case, if you maintain a diary like this, you will see yourself, whichever system, whichever technique you are using, what is the profit you can achieve. And I strongly advise all new traders to do that. Even experienced traders may benefit from it, and probably all consistently profitable traders are already maintaining a diary of some kind. And I use this diary, part of Q systems. I can look at their fundamentals, technicals, and it updates the P&L automatically based on real-time Zenith data. So if I come back to the question, what is the P&L? I think this is one sample you may see, but again, I am not trying to show this large percentage profit, 40% profit in 90 days. All I am saying that whatever system or technique you are using, log 100 trades, you will find out how much profit you are making. Doesn't matter what this gentleman did or what I did. What I do, I share the ideas. You may go to the forum, you may check for yourself what is the success rate. I don't want to talk about that.
Well, and the important thing here, and going over that, I did this a little bit before I started trading. My spreadsheet definitely did not look this in depth. I mean, the important thing here is being able to do something consistently over and over and over again. And I think that a lot of people get into trades. Personally, being in this industry, I have friends that come to me and say, "Hey, you do stocks, you trade. What should I buy? What should I do?" And it's always everybody wanting to jump in, with both feet. Everybody wanting to, take 20 trades right off the bat. And I think that consistency needs to win out. here, and methodology, having
True.
a consistent process that you can do day in and day out. That's a methodology that you need to follow, and you need to prove your own. So whether it's scalping or trading futures or Forex or stocks or options, etc., proving that system initially, I think that that's the only way that you can become consistent. And Sagar, I mean, to your credit, you've created some really amazing tools here, not just in Metastock, but outside of Metastock, we saw with QEdge, and the obviously the add-on within Metastock, etc. And your website's flashing on the screen right now, I believe, in YouTube, sagarnandi.com. We've mentioned the forum a couple of times. The forum is, one thing I love about Sagar is the free information. Everything always comes with a catch. You start following traders, and they say, well, you got to sign up with this, and then it leads to something you got to pay for monthly, etc. There is plenty of education and information and tools that Sagar provides on his website, on his forum, for completely free, which I think is just, it's a testament to how good of a trader, how good of a person Sagar is. So if you're looking to, start following a trader, if you want to look into, start getting educated a little bit more on a different system, Sagar's squaring a little educational hat on his website right now. Click on that.
Yes, click on that.
I mean, there's just a ton out there.
True. And Hunter, you mentioned something that is actually at the heart of why people take so long to be successful. I tell people, and again, I have to say most people don't follow. All you need to do is log 100 trades. Why it is important? It will force you to think that what is actually my technique? What is the reason I am taking this trade? What is my risk management? It will force you to think through a few things. And what happens invariably, a new trader will come back to me after a few weeks and ask this question. And this is the question they ask. Sagar, is it okay to delete everything from my diary and start over again? And that is a common occurrence. It's not good or bad. We are all human. What it tells is that they start filling the diary, and after 10 entries, they realize they either don't have a system, they don't have risk management, or if they have, they are not following it. So they don't want to go through the hard work of turning that simulation negative loss into profit. They want to delete everything and start over again. In simulation, you can do that. In real money, you cannot do that. Nobody is going to erase your loss from a real brokerage account. So my advice, and I know it is very difficult to follow, if you are having a loss in this diary when you are starting on simulation, whatever be the reason, no systematic approach, no risk management, not proper entry, doesn't matter. You work hard to turn that loss into profit. You can do that. Again, I will very confidently say I have not seen a single person who has not made consistent, reasonable return. And I'm not promising huge return. Let's say, again, based on the mathematics, 20 to 30 to 40% annual return on total equity, all dependent on how many trades you are taking without adding more risk. So if you don't take anything from this session of Metastock and me, just take this, you log 100 trades in a diary in some format and see the result before taking a real money trade. You will discover something that is valuable.
Really valuable advice. And that pretty much goes for, it's not just trading, it goes for a lot of things. Being able to, when I used to be in the health and fitness industry, and someone would come to me and say, how do I lose weight? Or, how do I get more muscle, et cetera, et cetera. So, well, the first thing, you have to document what you're doing currently to identify what you're doing positively and what you're doing negatively, and don't be afraid of the results. Don't go back through and delete all these negative trades and say, okay, well, I'll do something different, start over. Really get the whole scope of what you're doing with your trading, so that the data can speak for itself.
True.
And
true. Hunter, you again hit the hammer on the nail of a very important point, is that the difference between everything else you do and the market. When we go to a health club, we have a guide. There is somebody who guides us that you have to do this, you have to do that, or people will look at us in funny ways. Whether it is a health guide in gym, whether it is a golf advisor in golf club or a violin teacher for violin players in any area, we are in a way told, forced, guided to be disciplined. We have to follow. If I have to go to school, you have to do executive MBA, I have to go to school at 9 a.m. I have to listen to every professor's lectures. I have to do my homework. That is a structured environment. We are born, brought up, and we die in a structured environment. I think everybody who is joining this class, they are very successful in their life. That's why they have some money they can think of investing in the market. That success comes from hard work and discipline in a structured environment. But market is not a structured environment. Nobody tells us you cannot click the buy button right now. Nobody tells us you cannot short the market right now. The difference between health club, golf, violin, everything else in life and trading is only you can discipline yourself. And the best way, or probably the only way I have found, is to tell yourself, again, you have to control it. I'll not take a trade unless I log it in the diary, it passes all my checklists. But this structured environment that we are used to from our birth date to our last date in the world is very different. That has not prepared us to be a good trader because nobody controls us, which is different for retail traders and fund managers. Fund managers, big banks, proprietary traders, they have very clear guideline. If they don't follow it, they will not be in that fund management business long. They will be told to go out. But retail traders, we are different. We have to control ourselves. And that is not easy. I have to say also, it's not easy. But if you can do that, you know how to make profit in the market.
Well, and that's really important. And it's been a great webinar. We got very philosophical. I really dig it. It was, we went over a lot of good information. There were some questions asked during, and Jeffrey, thank you for, you've been kind of going through and offering your advice to some of the people that have been commenting in YouTube on your experiences, etc. The best thing that I would say is to ask Sagar. We'll throw up his contact information here. Having a mentor is very, very important. I'm a little bit biased. I think Metastock and Q Global, the add-on that was showed today, I think that they pair very, very nicely. And Sagar has done a wonderful job of really laying out steps to be successful utilizing that system. And for more information on that, you can go to www.sagarnandi.com. If you're wanting to get some of the tools that you saw today here, either Metastock or Q Global, which we saw, Fire, which Sagar was talking briefly about that he uses now, which is a new-ish add-on. We brought it back. Everybody really wanted it back. We redid Fire, brought it back. Just go to metastock.com/sales chat, and they'll be happy to kind of educate you on those things. So Sagar, best way to get a hold of you is through this website, correct?
Yes, the email, I am pointing this arrow to the email top right menu bar option. If you click that, you will be able to send email to me.
Wonderful. Sagar, thank you so much. It's always a pleasure having you on. I appreciate you showing us how you trade and kind of giving us your view overall on trading, not just this week's market. It's very, very valuable.
Thank you, Hunter. Thanks everybody for joining. Have a great weekend and have a wonderful, safe new year. Thank you.
Thank you, Sagar. And everyone out there in the audience, make sure you go to his website, sagarnandi.com. I appreciate you joining us this Friday, this beautiful Friday here in Salt Lake City, Utah. Our first market recap of the year. 2020 was a long year, and I hope that you all are starting off 2021 positively. And I hope that this webinar helped out a little bit. So stay safe out there. And as always, happy trading.
Thank you. Bye-bye.